please type can hear? If you can hear us, can you please type can hear? Okay.
Everybody, welcome
Hello,
in.
hello. So today is going to be a bit special. Yeah, Pete and I, we are going to join forces. Okay, we are going to actually talk about some of your homework. We have selected two right, one from you and one from me. Okay, and for me, you know my style. You know my style. I like to go in a bit deeper. All right. So Pete, you want to share with them what you will be going through, or you want to keep it a secret?
I'll keep it a little surprise later on.
Surprise. Okay, then I'll keep it surprise as well. All right. Okay.
Okay, all
Hey,
right.
hello Charles. Okay. Hey,
Hi
Chin,
guys, hello,
nice to see
hello.
you. Hope you had your
Good to
dinner.
see.
If you haven't have, okay, please feel free to eat dinner right in front of me. I don't mind, especially
All
if you
right.
have me next
Hey,
time.
yeah. Hey, I just want to before we start, right? Just to
Ah,
share that the last couple of weeks, actually Joe, myself, and Sarah, we are super encouraged because we did calls with several of you,
yeah, yeah.
and the thing is, you guys, the results are just amazing, man. Like we have seen so much growth in you guys, not just in terms of investing results, but also
Mm,
in your investing mindset. All right.
mm, mm,
So really, guys, if you have seen results, okay, I want to encourage you to share your happiness with us. All right. We want to, cheer together with you, right? So just put anything you have, be a reflection on your journey so far in investing. All right. Be it any
mm.
trades that have done very well, or it could be a losing trade. But if you have done good reflections on that, put it in the Facebook group. All right. We would love to be part of your celebration as well. Okay. Because
Yep,
some of
yep,
you
yep.
came to me, right? I was just telling Joe, it's quite funny. Some of y'all came to us and said, oh, this year I did 50%, I did 60%. So we were like very happy, right? Then as the course goes on, right, it's like as though the percentage keep increasing. So we started seeing 100, 170, and few
Mm.
100%. And today, right, I did one or student. Okay, maybe I don't mention names first, in case the person don't want me to share. But one particular mentee, from the bottom of the financial crisis to right now, okay, she went up by 500%. The whole portfolio.
Oh, Hadi, your record is broken.
So we're like, what? And,
Yeah.
and and guys, I just want to say, right, it's not like $5,000 become $25,000 only. No, it's like a 5-digit portfolio, right, becoming a 6-digit portfolio,
Wow.
right? So guys, so just before we start, I want to use this as an encouragement to everyone out there, right? That this is not the first time we have seen this kind of thing. It's just that it's very encouraging to see again. And and for those of you who just joined us, or you maybe haven't taken much action, right, be it whatever reasons, let's use this as an opportunity to encourage you to
Mm,
take action. Especially right now, we are seeing the market having some pullbacks, right?
mm.
Okay, so you might want to start looking at your strategies, your entry prices, and start looking at whether are there good opportunities for you to enter.
Yep.
Okay. Once again, we don't want to predict the market too much. I just sent out the market analysis, the market update today, right? So just to give you all a broad sense about what do I think about the market. But however, don't try to predict the market too much. The important thing is you want to slowly enter into strong companies that you are investing in, all right? That you're very confident. Okay, that will be really the success factor for you guys. Okay, so for
Yep.
those of you who made profit, I just want to say one more time, congratulations. All right, really, really, really very, very awesome work. Okay, so hey guys, everybody, can we just give them a Zoom clap, okay?
Yay. I don't know whether you all can see or not, but
Encouraging,
okay.
okay? So
Okay.
even
Or
those of
Pete,
you who have not seen results yet, don't worry. Your time will become, okay? You will be the next one. Okay?
or maybe Pete, maybe you can just share a bit, right? What did the mentee that you talked to earlier today? What
Mm.
was the maybe one thing she did that really, in your opinion, really contributed a lot to her results?
Okay, so I think okay, so just to give some backstory, right? So she was investing a fair bit before the crisis came, right? And then during the crisis, of course, she was caught a bit off guard, and then she lost quite a bit of the portfolio. But the key thing is she stayed on with the community, and she told me, right, she was watching the videos, and guys, she doesn't really, okay, English is not her first language, right? So she
Mm,
wasn't very participative in the community in terms of commenting and whatnot. But the good thing is, and I think this is the most important thing, is she was just listening at the back end. She attended all our weekend classes, and she was continuously learning and trying to make sense of what we are saying. And the good thing is this, she told me, right, when she listened in to myself, Joe, and Sarah, when we teach and then we talk about the stocks, it gives her a lot of how to say calmness, right? When it comes to investing, right? She wouldn't press the button too easily. Okay, so in the end, right, her portfolio, while it went down a lot during the crisis, she realized that it was actually a good opportunity, right? So she took her back end savings and then top it up, all right, and then she just invests accordingly, right? And voila, cut a long story short, 500% in 6 months.
Wow, wow, wow.
Not too bad, super good.
Super good, 500%.
I think she beats me hands down, right? I'm not even close to 500%.
Me too, me too.
Crisis. So the main thing is I'm still waiting for the next crisis to come, so that I can also be the 500%.
I'll go for 5,000.
Yeah. But guys, really, the best thing about this is I'm super happy when I see students get very good results. Even better than what the mentors have achieved. Although we can be a bit sour grapes now, but really, we are very happy when you guys get good results. Because tell you all very honestly, right? Why do we want you all to get good results? Very simple one. When you all get good results, it means we have done something correctly, right? And naturally, right, you guys will be our best ambassador. So I want to be very, very open, right? I want you all to get good results. Also got objective one, also got motive one, because you guys are our best ambassador to go out there and spread the words of investing, spread the knowledge of investing. Okay? All right, so we have 65 of you here, minus the 2 of us, so there's 63. Okay, so let's get started. Okay, so
all right, Pete, we have an announcement to make, right?
Yes, we do. Okay. We do. So we have an announcement to make. So last month, guys, do you remember what sector we went through or not? Do you all remember? Can you all type in the chat? What sector did we go through?
Okay, healthcare. Okay. All right. Healthcare, correct.
So every group, spot on. Every group, silver, gold, millionaire, and above tier, each of you all had your own presentation, and then we did a poll, right? So right now, we're going to announce the winners of last month's healthcare sector stock analysis, okay?
Yep.
So here
we start from the silver tier?
Yes. Okay, so let's do that, okay? So September 2020 winners are, drum roll, the first one is Bernie from the silver tier.
Good job, Bernie. If you are here, can you please type here so that we know that you are here? We really, really want to celebrate with you.
Hey, you all remember which stock did Bernie go through? No?
I can't remember that. Darling, which stock did Bernie go through? Merck.
Yeah, she went through MRK. Yes, very, very good. Okay, Merck. Okay, so hey guys, once again, they win doesn't mean it's a recommendation to buy or sell. Okay, please do your own due diligence first, right? But at least Bernie has done most of the legwork for you in terms of understanding a pharma company like Merck. Okay?
Yep.
All right, drum roll again. The second one from the Go Group is Edwin.
Yay, Edwin.
Okay, Joe, so this one you should know. What stock did Edwin go through with us?
Okay, Edwin went through Teladoc. Teladoc. I don't know how to pronounce T-Doc, okay?
Right. Teladoc. So it's
Edwin?
telemedicine company.
Yeah.
Okay? And Teladoc actually, I think they just did kind of like a acquisition of another company called Livongo.
Yeah.
Okay, so right now it's in the limelight. So yeah, do go and watch it, pay more attention. And last but not least, we have from the Millionaire Group and above, Ken Lim. Hey Ken, you're here now. Ken, I think you're here, right? Ken, congratulations.
Yeah, I saw Ken.
All right.
Edwin, are you here, Edwin? I think I saw your wife's name.
Yay. Okay, so to all three, congratulations. Now, at first, right, we wanted to make this a live award ceremony, like we can see you, then we can pass you the reward. But of course, unfortunately, the current situation still doesn't allow us. So don't worry. Subsequently, after this, we'll get in touch with you guys. All right, then we'll send the reward to you guys. Okay.
Yeah.
All right. Everyone, congratulations. Okay. Cool. So with that done, Joe, how about this? Let's go into the first stock that you want to go through. Then I'll go through mine.
Okay. Sure. Okay. All right. Can you guys?
Hey guys, everyone, can we congratulate the winners first?
Yeah. Congratulations. Okay, Edwin, Bernie, and Ken.
Yeah. Okay. So this one actually we'll do a bit differently. This one we will not ask you all to present per se. But we wanted to take a different slant to say, hey, we look at all your research, right? Then we picked out those that are interesting, man. Okay. And guys, but once again, I want to really encourage and say good job to all of you who have submitted. All right, we were trying to do the research and trying to make sure decide who to pick, and it was really too many good ones already lah. Right, so we decided, okay, why not we go through together. All right, and yeah, so we're going to resume the old style in the future, but right now Joe will go through one of the stocks that you have chosen and dive a bit deeper, and I'll go through one after Joe. All right.
Okay. So pardon me if I'm a bit long-winded. You guys know my style quite well by now. Okay. I hope so. If you still don't know, then you can get to know me better. Okay. So I am going to go through Berkshire. Seriously, I saw this research on Berkshire, but so sorry, I cannot find it anymore because I think there's simply too many announcements, messages on Facebook. Okay. So let me present. Yes, Berkshire Hathaway. The very, very interesting thing about Berkshire Hathaway is, this is maybe, maybe me, okay? I used to think, or I think most people think that Berkshire is all about stocks, dividends, a huge cash cow, but sad to say, most people are wrong. I must say most people are wrong. Why? Because when I dig in very, very deep, Berkshire Hathaway actually has three main pillars: the insurance business, non-insurance business, as well as the equities. Equities meaning the shares, the stocks that Berkshire holds. So for this presentation, I'm going to focus on two main arms, two main pillars, the insurance business as well as the equities business. I'll let you know why I don't want to focus so much on the non-insurance business later on. All right. So if those of you who went through Berkshire, if you read the annual report, right, you will notice that in 2019, for the entire year of 2019, they had an unrealized net profit of 53.7 billion on their portfolio, on their books, but it is super misleading. Why is that the case? Very simple. Since 2 years ago, actually, the US government actually requires Berkshire to state the profit and losses of their stock portfolio, okay, the paper losses. The US government requires them to state all these paper losses as actual profit or losses. So let me just ask you guys, do you think this is an accurate representation of what Berkshire is making or what Berkshire is losing? If they are required to actually record their paper losses as actual, paper profit and loss as actual, is it accurate or not? All right. Is it accurate? Yes or no? No, Chin Chin says no. Okay, Lionel says no. Actually, it is no. And even Warren Buffett and Charlie Munger totally agree with all of us and say, no, this is not the way to do it. But they can't do anything because they are not the government, okay? What happened is, you can see here, okay? If you look at Morningstar alone, in 2018, you'll see that the earnings per share for Berkshire is $1.63. Come on, miserable. But in 2019, it shoots up to $33.22. This is a 1,900% increase in the earnings. But is it accurate? No. Why? Because in 2018, at the time of coming out with the report, the market actually had quite a big correction. And in 2019, at the time where this report was created, all right, the stock market actually shot up a lot. So this is why the earnings are not accurate. So please, guys, if you want to really analyze Berkshire, do not rely on Morningstar alone. It is going to give you very, very weird readings. And pertaining to the insurance arm, right? Berkshire actually has these three main groups: insurance, okay, Geico. It forms up all the civil servants insurance, okay. Now, before I carry on, I want you to think of why Warren Buffett actually bought all these things, okay, and how he actually manages the risk. Civil servants insurance, that means every civil servant in the US has to go through Geico to buy insurance. So the moat is super strong, all right. And okay, from Geico, primary group, and reinsurance group, actually they cover vehicles, casualty, property, healthcare, surety, travel homeowners, And then even this reinsurance, they sell back all these risks to other insurance companies. All right, take on property and casualty insurance again, life and health, retroactive insurance, which refers to insurance that are purchased to cover a loss that has already occurred. So let me ask you, do you think Berkshire's insurance portfolio is diversified or concentrated? Diversified or concentrated? Diversified, very, very good. This is one of the methods how Berkshire actually mitigates their insurance risk. All right, very, very clever. And you can see this, they are very, very strong. In fact, even for the property and casualty insurance, which is actually quite risky. Okay, my computer is not responding to me very well, but okay, all right. This is how, okay, Warren Buffett or Berkshire actually further mitigates the risk. They actually receive premium upfront and pay the claims much later. And you see over here, the payment can actually stretch over many, many decades. This is one of their cheat. I wouldn't say it's good or not. All right, pay now, collect later. And the other thing that Berkshire can do is with the money that they collect, okay, when they sell this insurance, basically they do not have to spend a lot of money to actually come out with the service or the product. It is just a promise, and it's almost free money until the claim is made. All right, so this thing is what they call float. And for Berkshire, they are able to reinvest all this money. And you look at all this float that's accumulated over the years. 1970 is only 39 million, but 2019 is 129 over billion. Okay, correct or not? Peter, am I correct? 129 million. Okay, which is I don't know, my maths fail. Sorry. Okay, so this is really how they really make money. This is how they really create their big cash pile. And furthermore, okay, they actually have a very, very rigorous system to actually design their contracts, design their policies such that it doesn't really subject them to a lot of risk. And in Warren Buffett's words, this is one of their strengths, and this strength will never be compromised. All right. So they have very, very rigorous systems. They don't pay out a lot, even when, okay, and this is really a result of Berkshire's very, very unique advantage. They can engage in better quality investments, unlike the competitors. Many insurance companies, they cannot really do very, very meaningful investments like Berkshire because of regulations and because of a lack of know-how. But Berkshire is different, okay? We all know how powerful Berkshire's stock portfolio is, all right? And I really want to say this, okay? Disciplined risk evaluation is the daily focus for our insurance managers, and it is this strong discipline and mindset that leads to very, very awesome results that we are all seeing right now. All right. The third thing for the insurance is, okay, Warren Buffett promises that the loss will not come close to straining the resources that Berkshire have, okay, even if there's a mega catastrophe. All right. So very, very important. Even when there's a big thing, Berkshire will not be shaken. And in fact, they will be eager to add to their business. So think about it. How many of you can say that, hey, when the stock market crashes, you are eager? This is how Warren Buffett mindset works. And I think there are a lot of things that we can learn from it. So we can see that, okay, for Berkshire, earnings are quite well balanced. And if I were to ignore these investment gains and losses, which is stipulated by the government, we see that actually it's quite well balanced, okay? No one portion occupy the majority of earnings. Okay, so what happened in 2017? If you notice, okay, for insurance, they actually suffered quite a big loss, almost $2 billion. But look at this, okay, this is how much Warren Buffett lost from the 2017 catastrophic hurricanes. What happened was there was a lot of hurricanes that occurred in the US. Okay, some lost everything, but Berkshire Hathaway lost less than 1%. So really, really, Warren Buffett, when he says something, right, he can do it. He can fulfill it. All right. So as a summary, these are the really, in my opinion, these are the main businesses of Berkshire Hathaway, and this is their moat. Insurance is very competitive. That's why I say it's very low. All right. But the key thing is, okay, it depends very heavily on risk analysis and management. And the good point is it brings in float at a very, very low upfront cost. And to me, okay, this float plus the investments creates a cash pile, which seriously is bigger than some countries' GDP. All right. So the rest of it, I would say they are just very traditional businesses, narrow moat, very narrow moat. All right, except for the equities and securities, where I think almost everyone here can agree that, hello, Berkshire Hathaway stock portfolio is really one of the best in the world. So I really want you to see this. Okay, this is in summary. This is how I think Berkshire really shines. They collect the float from insurance, which adds to the growing cash pile. This can be channeled to their investments, and the investments add on to their growing cash pile. And because they have a growing cash pile, they now have the ability to take on even more risk and do even more policies from the insurance. Let me just ask everyone here. I just want to do a very quick test. What kind of mode do you think this is? From this diagram, what kind of mode do you see? Come. Anybody? Edwin, network effect. Yes. Hey, awesome. You guys are getting it, huh? I didn't see it until I drew out this diagram also. And yes, you are right, network effect. So instead of attracting users like your Shopify, all these things, Berkshire simply attracts cash. Simple as that. No need to go and attract the monthly active users. All right, just simply attract cash. All right. And then when you read his annual reports, right, you see so much investing wisdom. First thing, okay, I just want to summarize for all of you. Charlie and my favorite uncle Warren Buffett urged all of us to focus on operating earnings, okay? And how does he look out for companies? Okay, they must earn good returns, run by honest and able managers, and they must be available at a very sensible price. So some of you ask us, okay, hey, if the price is slightly high, can I go and buy? There's no right or wrong, but okay, think about it. If you're Warren Buffett, would you buy it? Okay, and sometimes even a lot of you also ask us, hey, election is coming up, market is going to be volatile. Okay, what to do? In fact, okay, he is just saying, okay, from all these companies, there will be losses, sometimes company specific, or okay, at other times, our gain will be outside. So he is actually maintaining a very, very calm disposition when it comes to the stock market fluctuation. So, okay, focus on value rather than share price fluctuation, and you will do well. You will do well if you focus on the value rather than share price fluctuations. So a bit more details on what to look at. All right, those that are earning more than 20% on return on equity, okay, these are goods. Okay, companies that are able to earn their profits without employing excessive levels of debt. All right, and okay, Warren Buffett doesn't do any forecasting. He doesn't do any prediction. All right, so people have asked him over the years, you know, what will the interest rates be like? How will it affect the stock market? And he says it's very upfront. Charlie and I have no idea what rates will average over the next year, 10, 30 years. All right, okay, but the pundits, listen to his words. He called these people pundits, which means speculators, who actually choose to have opinions on these subjects, reveal by that behavior more about themselves than about the future. Okay, I really love, you know, his very calm, peaceful, very objective way of looking at the whole situation. In fact, he admits readily that he doesn't know, even though he is the grandmaster of investing. But to him, this is really not that important at all. All right, and for those people who do not use borrowed money and who can control his or her emotions, okay, compound. These people, it will be much better in the long term. All right, but for the others who are using borrowed money or who cannot control his or her emotions, beware when the stock market drops. So this is the main $1 million question that everybody loves to ask. What happens if Warren Buffett and Charlie Munger passes on.
No.
No, I also don't want. I also don't want. Wow, these two are my idols, my 偶像 in the investing world. Okay, of course, you and Sean also lah. All right. So
I don't think they will die lah. Actually, they. Sorry.
Yeah. All the preservatives from Coca-Cola is preserving Warren Buffett very well, right?
Yes, that's the inside joke we have actually.
Yeah. Okay. So, this is what they say in their report. This 2019 report. Okay. Actually, for both Warren Buffett and Charlie Munger, they are actually very highly motivated to keep Berkshire running and growing even after they pass on. Why? Because their families have very, very high stakes in Berkshire Hathaway. It's for their families. All right. And they are very, very focused in appointing directors with a lot of emphasis on their thoughts and principles, rather than, in some companies, in some MNCs, their ability to create processes that are a bit robot-like. So they have actually named two successors. There's Ajit Jain, I think. I hope I didn't pronounce his name wrongly. He's in charge for insurance operations, and Greg Abel as in charge for non-insurance operations. So what does it mean for you and me? Okay, we know Berkshire is one of the most transparent companies with very, very strong focus on ethics and excellence. And the system that Warren Buffett came out with, value investing, almost like a religion to some people, culture and systems that Warren Buffett has set up for Berkshire Hathaway, excellent, top notch. But as I think all of you will be familiar, even when the systems is good, it doesn't mean that people always follow. So this is my question mark. All right. Will Berkshire continue to survive, to continue to be very, very successful? It remains to be seen. Why? I am not fully confident that the new directors may keep closely, because sometimes these new directors may be interested to make themselves look good, better than Warren Buffett. Maybe, I don't know. Maybe not. But as of now, I do not know. So for me, okay, I don't see a need to sell Berkshire shares in a hurry, and I would like to observe how the new directors manage Berkshire and report whatever is happening in their annual reports, the future annual reports. Okay, so this is the last slide of my presentation. So will I invest in Berkshire? Answer is yes. Am I very scared that once Warren Buffett passed away, things will go down? Actually, I don't know, but I'm not too worried as of now. Okay. Yep.
Hey, all right. Hey, thanks, Joe. Okay, guys. So I don't know you all are stunned by the presentation, or are you all watching very intensely, but any questions before I move on to the next?
Yep. Any question?
Okay. So guys, the thing is this. Some of you might be wondering, hey, Pete, how come we are still going through Berkshire when we have done Berkshire so many times? It's like a stock beaten to death, right? We are like flogging the dead horse. But the key thing is this: a lot of people, when they invest in Berkshire, they don't really understand Berkshire, right? That's why today, on my Facebook page, right, I posted this quote, which I copied from somewhere else. Knowing the name of something, right, doesn't mean you understand something. Okay, so a lot of people, they will claim that, hey, Berkshire, I know what it is, Warren Buffett's company, so on and so forth. But it's very important, especially for us, right, investors, to really dig deeper to understand what exactly is behind the company. All right. For example, guys, a lot of people, when they talk to me about Amazon, right, they will say, hey, Pete, what do you think about Amazon? Do you think, their Amazon will continue to grow and they will sell more and more goods? Now, what is wrong with that statement? Those of you who understand Amazon, what is wrong with that statement or with that question? What do you think? Can you all type in the comments? What do you think is wrong with that question? So people ask me, hey, Pete, do you like Amazon? Do you think that it will continue to grow, selling more and more things online? What do you think? Okay, people is saying Amazon doesn't just sell books. Yeah, of course, Amazon started from selling books, but now is selling everything on e-commerce, right? But guys, if you study Amazon, you will know that for Amazon, there are multiple streams of revenue, right? Yeah, and like what Nicholas is saying, yes, like what Chun Hua is saying, right? They don't understand the business, because right now, Amazon, based on the growth rate, more and more likely the cloud business will be the dominating business. Okay, So guys, it's very, very important for you, right, to look past the surface. For example, when people talk to me and say, oh, I like Alibaba because they do Taobao. I was like,
Oh.
like, wow. But never mind, guys, their ignorance is our profit. Okay? Their ignorance is our profit because those stupid people will go and sell this kind of companies and then, they will lose the opportunity. Okay? Now, with that said, right, let me get into the next company that I want to talk about. And it is, let me see, where is it? Okay, and is this company. So today I'll do a bit different. I'll show you all a lot on like how I do the research, okay? So wait, where is the slide? Give me a second. Okay. And this company, interestingly, why I picked it, right? Because it was submitted by two different people from different groups. So I thought, hey, interesting. Very seldom we see similar, exactly the same company coming in. Okay, so by Chin Chin and Jerica, all right, wow, female power, right? Okay, so both of them talk about this company called BlackRock. Okay, and for those of you who don't know what BlackRock is, in a nutshell, all right, this is really maybe understating a lot of stuff, but in a nutshell, they are one of the largest provider of all your ETF and mutual funds out there. Okay, so for example, if you heard of this company called iShares, okay, it is BlackRock. Okay, it is actually iShares by BlackRock. Okay, so to give you all a sense, what they do, instead of using my presentation, I'm going to use their presentation to show you guys. Okay, so this is by Chin Chin, if I'm not wrong. Okay, yep. Okay, so let's go through very quickly. So what is BlackRock? Basically, they are companies that provides ETF in general. Okay, and when I first look at this company, I got a shock because usually when I look at asset under management, right, the very familiar things that I looked out for, right, is how many billion under management. Okay, how many billion? I'm very used to the word billions. Nowadays, billions is like very common. But when I started to look at this company, I got a surprise because this company is working on the $1 trillion. Hey guys, 1 trillion is how many billion?
Actually, how many?
1,000 billion is 1 trillion.
Oh.
1,000. 1,000 trillion is 1,000 billion is 1 trillion. Okay, that's why they say the $1 trillion company like Apple, like Amazon. So you think of it, BlackRock, the asset under their management is like Apple combined with Amazon, combined with Facebook and Microsoft, and still got some spare change. Okay, that's how big their asset under management is. Okay, so just to give you a quick sense, roughly what do they do? Mainly, a lot come from the index and the ETF side of the house, right? You can see both add together is already close to $4 trillion already. Another 1 trillion over come from what they call active management. That means they really go and manage your money for you. Okay. So products, mainly iShares and all this. Now the key thing is this, guys. I want to share with you all in terms of their finances. Okay, I'm not sure you all can see this, right? But when I look at this company, when I first saw what Chin Chin they all said, I got very interested because this is a very high margin business. Okay, can you all see over here, right? Net margin is actually a crazy 30%. Later I'll show you Morningstar again. Okay, so this is a net margin 30%. Now, why is this business so highly efficient? Because to be very honest, really, they don't do anything, right? The moment they set up the ETF, they just collect what? What do they collect is as their revenue? They collect management fee, right? For all of you who buys ETF, you know that there will be some management fee here and there, right? So this is the main business model for BlackRock, okay? All right, so down Fried Snake, later I'll go through that. Wow, but hey, Chin Chin, can I just give you a quick comment, right? Chin Chin, nobody can read this, not possible. Okay, when I saw this, I was like, wow, what's happening here? Okay, so please make sure, at least for yourself, if you can see clearly, then that's very important. Okay, now when I look at BlackRock as a company, right, then I suddenly thought of, hey, there are competitors, right? So there are other ETF makers like your Vanguard, like your MSCI and things like that. So I decided, hey, why don't we go and find out a bit more, see what this company does. So I decided to go and dig out, hey, who are their competitors? all right, in this regard. And over here, let me just share with you. Okay, so guys, these are websites that you can go to lah. Okay, like maybe craft.co, right? So they will show you who are the competitors. And basically you can see, right, mainly are the this company, MSCI, okay, Vanguard, and State Street. These are your big four, you know, like accounting firm, there's big four, you know, things like that. These are your ETF makers, big four, okay, and they make the most. However, in terms of valuation, you can see that BlackRock is way in front of all of them in terms of size-wise, okay? And then the next thing I want to show you is in terms of revenue, they are also very, very big, all right? In fact, MSCI's revenue is almost like 1/10 of BlackRock, right? Lake Mason is almost nothing. State Street kind of can compare. Vanguard one, they don't have it here, but from what I know, it's about $2 billion, okay? So when I look at this straight away, right, guys, as you zoom in as a researcher, as an analyst, straight away you must ask yourself, hey, maybe State Street is a better business. Maybe, right? So I want you all to always go in with this lens of like, hey, let's look at the competitors and compare, right? So going to Morningstar, okay, over here, this is BlackRock, all right? And you can see in terms of their profitability, for example, okay, net margin, of course, like I said, is very high, 30%. Okay, you can also see the ROE is like 13%, not too bad. Interest coverage is a crazy 29%. Okay, all right. What else can we see here? Now, growth, we don't see magnificent growth, to be very honest, right? It's okay growth, like single digit growth. Okay, but for a very efficient company, right, then the good thing is this: you don't need them to grow very big, but they will keep on generating cash, right? You see that the free cash flow has always been consistent, right? At a 2 billion, right? 2 billion mark. Okay. So this is BlackRock. Now, when I look at State Street, right, over here, this is State Street. Now, on the surface, guys, on the surface, when I see State Street and BlackRock, wow, BlackRock 14 billion in revenue, State Street actually is 10 billion. Not that far off, so actually comparable. Okay. But however, when I look down, right, and I look at the net margin, guess what? Wow, it's very different. Oh. It paints a totally different picture. Okay, so this is something that when I look through Jerica's presentation and Chin Chin's presentation, right? Chin Chin touched a little bit on competitors, right? I saw your slide, you touched a bit on competitors, but I want to encourage you all to dig deeper and maybe try to find out, hey, is there a reason why, okay, that State Street is earning such a low net margin compared to BlackRock? Okay, because when a company and company A and company B are both in the same industry, guys, guess what? They should roughly earn about the same net margin. Okay, otherwise there will be some kind of arbitrage happening already. Okay, so this is what I observed, number one. And number two is you can see the ROE is very, very poor, right? And you can see the cash flow somehow, okay, getting better recently, but previously it wasn't very, very good. Okay, so yeah, so when I compare State Street and BlackRock, immediately in terms of fundamentals, BlackRock attracted me straight away. Okay, and one key thing I still like about this business is that this is actually a dividend paying business, and you can see the dividend has been increasing quite a lot actually. Like for example, 2017 to 2018, right, went up by 20%, and then 2018 to 2019 went up by another 8%. Okay, so quite interesting. So this is definitely a company that is suitable for those of you who are looking for some kind of stable, mature company because they are paying dividend in this case. All right. But guys, one thing to take note is that this is definitely not going to be your explosive growth company, right? Because why? The revenue growth is not what we expect to be, right? It's about 2% a year, 9 to 5%. That's about it, right? We don't see like what we saw in other tech companies, tech giants, 20%, 30%. Okay. But is this a very solid company? Absolutely. It's very, very, very solid. Okay. And last thing I want to go through is the valuation. Now, this gets me a bit, wow, like, hey, this is not bad, right? Why? Because when I look at valuation, actually, despite the stock price, later we go to technicals, despite the stock price going up, you can see that the current valuation is at 21p, which is still okay, right? Which is still okay. And if you look at, for example, a more strict definition, that means you strip away some of the, you add in some of the debt, right? Actually, the EV to EBIT, enterprise value to earnings before interest and tax, right, is 15 times only. 15 times only. Right, so I think, hey, not too bad. No, I think this company just ever so slightly overvalued, but currently, if you ask me, fair value, right? I would say it's fair value. Okay, so excellent choice. Now, this is a company that, to be very honest, guys, even I am guilty of it. This is a company that I obviously know they exist, right? Because we have been looking at iShares ETF for so long, and I actually know this company before, but it never occurred to me that, hey, why not we look at them as a business? Okay, because I think going forward, what do you think? Hey guys, what do you think? Right, put in the comments. What do you think as a business wise for BlackRock? Do you think going forward business is good or not too good? What do you think? Is it going to get better or worse? What do you think? Jericho say better, right? Because Jericho wrote the report. No, I'm just kidding. Okay, but honestly, to me, there's a shift towards investing in the extremes now. What do I mean the extremes? These days, when it comes to investing, nobody wants to do unit trust anymore. Very few people, unless you are really ignorant, right? Most people will either go full on passive, which we saw a lot of money flowing to passive ETF, right? Like your SPY, for example, or more people choose to go to very, very active. For example, they either invest themselves like you guys, or they choose some kind of unique ETF that is maybe sector-based, for example. So I think overall, right, the business for BlackRock should get better and better, right? As more and more people go into passive investing. Okay, so that's how I see it. I think this is a fantastic find. I think right now it is doing a 2% dividend, right? So that also tells me that when you're giving 2% dividend, it's quite hard for a company to really grow fantastically, And one big reason I feel is why they give so much dividend is because there's some amount of insider ownership as well. So they need to pay themselves. Okay. Now, last part, just want to do some TA for you guys. So you look at BlackRock, it has been going up, and away since COVID. But actually, even before that, right, you look at the price trend since 2016 to today, is generally, slightly upwards on the sideways. So just nice fit into the profile of what company it is, right? It's a stable, dividend-paying, high-quality business. Okay. Quick TA just to show you guys. Previous all-time high around here. Okay. 257. So right now we see a breakthrough. Okay. So this is a 5-year chart. So let's zoom in. 1 year. Hey guys, for those of you who are new, you cannot follow my TA. I'm talking a bit fast. Don't worry, guys. Go to the unit segment, go through our technical analysis modules, and you'll be up to speed in no time. Okay. Hey, by the way, we are recording this as well, so you come back and watch again. Okay. So the pink line is what we saw previously. We drew this, and right now it is heading up. So now actually it's a bit overextended, right? And yesterday we had a massive drop everywhere in the Nasdaq, right, including BlackRock. Interestingly, okay. So if anything, this should serve as a support. I want to see it come back down, even if I want to enter a possible position. Okay. Hey, but guys, just full disclaimer on my end. Like I said, I don't even know this company was investable, so I wasn't. I'm not invested in it yet, but certainly interesting, especially for those of you who are seeking to add more stable company and also dividend paying as well. Okay, so that's all I have. Any questions? Put in the chat. Okay, so let me see. Edwin, I was thinking of Strategy X Plus until I saw the share price action. Yeah, so in fact it was going quite nicely until the September drop. Suddenly it had a parabolic jump. So guys, okay, so we never know why that happens, but it's okay, right? Kelly's asking, Fidelity is offering zero management fee ETF. Will such thing lowers margin for companies like BlackRock? Okay, so the thing about a zero management fee ETF, right, is that there will still be expense ratio, right? There will still be expense ratio. Why? Because you need to hire somebody to replicate. For those of you who are not sure how ETF works, ETF actually is quite a manual process in a certain way, right? You still need a person, for example, if you hire a person like me, a portfolio manager, to replicate an ETF that follows the index. For example, let's say if you want to follow the S&P 500. Behind SPY, there are actually a team of managers trying to replicate the ETF. Okay, So I think yes, it may lower the returns, but the thing is this: when your fund size is so big, right, 7 freaking trillion, even if you charge 0.01, 0.02, right, it's actually okay, you know. So for example, right now they are at 14 billion revenue. So 14 divided by 7,000, right, is what? Is 0.002, right? So they are actually charging only 0.2% right now in terms of management fee. Okay, so over here for the mathematics, right? So I don't think it's a big problem. And I think for most investors, right, they wouldn't quibble about should I go with Fidelity or should I go with BlackRock, just because of that little bit of management fee. A lot of times it's still got to do with the quality of the ETF that they produce, and whether it tracks the index properly or not. That's more important. Okay. The Venus question: will I add to growth portfolio? What do you think, Davina? What do you think? Will I add this to a growth portfolio? What do you think? Dividend paying, revenue grow at 2 single digits every year. What do you think? Obviously not lah. Okay, obviously not. Okay. Okay. Edwin, can you share more about this idea of quality of ETF? Also very simple. Okay, out of this topic, so very quickly, the quality of ETF means the ETF, whichever index it tracks, it should track very, very closely. For example, if it's an SPY, which track S&P 500, if S&P 500 go up by, let's say, 10% this year, I would expect SPY to also go up by almost 10%, maybe 9.98%, something like that. Okay? Okay, that's all I have. All right, Joe, on your end. Okay, so what do you think? So Berkshire and BlackRock, both B,
Yeah.
Both B. Okay, so guys, right now I want you all to just do a quick one. All right, in the comment, if you like Berkshire, type in
do I win the
B1.
prize first?
Huh? Did you win the prize? No, I don't win the prize.
No. Will I win any prize or not?
Yeah. I don't know. Maybe. I asked Sarah to give you the prize. Okay. So if you all like Berkshire, type in Berkshire. If you like BlackRock, type in BlackRock. Okay. Which one do you like?
Hey Don, you want my photo? Don't like that
Okay.
you.
And Junjie brought out a very good point. Is can I invest in both? Of course. Yeah. Of course you can invest in both, right? But guys, once again, recently I was just talking to Joe and Sarah, and we're talking about, some students their portfolio damn messy, like 50 stocks, 40 stocks. Like, guys, when you have 50 stocks, 40 stocks, essentially you are BlackRock already. And that is not a compliment, okay? If you have 50 stocks and 40 stocks, you are like doing an ETF. What's the point?
Berkshire, I think, has 40-something, 50-something holdings.
Yeah, Berkshire has 40-something, but Apple represents half of it. Okay, so guys, if you are going to invest for yourself, there's no need to over-diversify. So don't tonight, because Pete and Joe talk about Berkshire and BlackRock, then suddenly tomorrow when I do coaching call with some of you, I start to see BlackRock and Berkshire again. Right? Always ask yourself, all right? Always ask yourself, does BlackRock or Berkshire fit into your portfolio? All right? For example, if you are going for a stable portfolio, all right, you want steady as it goes, and you still want dividend along the way, then hey, you know what you want, then you can go for Berkshire, maybe even BlackRock, for example, right? But if you're a growth portfolio, you want to grow much faster, but you don't mind bearing the risk and stuff, then hey, Berkshire and BlackRock would not be suitable in this case. Okay? All right.
Also, maybe I just also want to say something. So please don't go all ETF in your portfolio. Then you might be as well just buy one S&P 500.
Okay. So also don't buy too much ETF lah.
Yeah.
Hey, I just want to remind Joe that he actually has a very, very good ETF to share.
Oh.
What? Oh. Okay. Maybe I share screen.
I shared it with 2 of my students during coaching call today, and they said that it should be shared with everybody. So
Okay.
Yeah.
Okay. Can you see my screen?
Yep.
Okay, wait. So let me show all of you. How much? Okay, can I just ask? How many of you are interested in S&P 500? Anybody interested in S&P 500?
I mean, if they're having like 50 stocks in their portfolio, I
50
think
stocks,
this is
might as
better.
well, right?
Maybe they form their own S&P 500 already.
Yeah. S&P 50. Okay, so I just want to share this. Let me shift my camera out of the way. Sorry. It's affecting my view. So I'm going to show all of you this thing called SPYG. Okay, what is this? Actually, this is actually it stands for SPY growth. That means they try to pick out the highest growth companies in the S&P 500. So I think they also realize that some people just love the growth aspect of S&P 500 without the other laggers. So this is SPYG, and price is $51. A lot more affordable than one S&P 500 share, which is around $300 over. Okay, the other one, if you are more inclined towards dividends, okay, you can actually go for SPYD. These are the companies in the S&P 500 that are actually giving out the most dividends. So they actually filter out for you. Okay, you can go for SPYG or SPYD. And I think I did a sharing a few weeks ago. Okay, if you go for both, right, at the point of time, even if you go for SPYG and SPYD, the total cost should be around 70 something, $80, near $80. All right, and even if you combine these two, the dividend yield is almost twice as high as the S&P 500. Okay, so for those who are very, very interested, okay, you can really go for go and check out SPYD, SPYG. Check out the expense ratio. Check out the holdings in these two ETFs to see which one you like better. Okay, and I think one good news also, SPYG, I think this year recently it becomes optionable. So that means you can actually do options. You can sell put on SPYG. SPYD, I cannot remember whether they have the.
I think not yet.
Not yet. Not yet. Okay.
Not yet.
All right. So okay. So this is my really two gems that I picked out. SPYG and SPYD.
Ayo, Joe, you never share with them the real gem of this, man.
You know?
No, okay, ayo guys. Okay.
What?
Ayo, okay, let me tell you why is it so powerful. Okay, SPY, right, the S&P 500, okay, for this year it's up 10% lah. Okay, you want to make a guess, right? SPYG, right, is up by how many percent this year? You want to make a guess lah?
I can't remember.
Ayo, Joe.
I do too much research already.
Okay, I see the gem in Joe, that's why I married him. But Jerica, no lah. This is the ETF leh. I want to tell you, yes, Kelvin, yes, 30%.
Yeah.
30%. SPYG, okay, it's just $50 plus dollars, okay, and it has 33, I think 50 something holdings, okay, and it's already up 30% this year. So guys, okay, for those of you, okay, who really just want a very quick diversification of a portfolio, and you just want a 30% year on year, go and get SPYG. Okay, if you go and sell a put right now, right, okay, at $51, right, you can still even get $170 income.
Yeah.
Seriously, yeah.
For how long?
Expiring 31 days lah.
31 days.
I mean,
it's not too bad.
I mean, it's a very quick way to diversify a portfolio, and you can get 30% growth year on year. Yeah, so, and then you can get 1% dividend also. So this is the real power lah, Joe, tell people.
I forgot, I really forgot. But thank you for reminding me. Yeah. Oh, someone is talking about QQQ or TQQQ. Maybe you want to talk about this.
TQQQ, oh my goodness.
Okay, so for TQQQ and some of the other QQQ, a lot of them are synthetic ETF. So I don't want to go too deep into it, but generally I don't like synthetic ETF for various reasons. But the main reason is because firstly, the expense ratio is very, very high. So it actually eats into the profit. So for me, I like to go for what I call natural ETF. That means they literally hold the actual positions when the ETF is being formed. So I go with the traditional QQQ lah. Okay. Now I think Hardy's question is very important. Is QQQ or SPYG better for growth stocks? Okay. So I think there is no hard comparison. The one way I would look at it, right, is if I were to look at QQQ and SPYG, I want to look at what's their holdings, right? I want to see the holdings, and I want to see what's the difference here, Okay, so I guess for QQQ, everyone already know is your Nasdaq, right? So your Nasdaq. So let me see. Let me see if I can put it side by side for you all to see. Okay, give me a second. I'm just gonna pull out SPYG as well.
Yeah, maybe to actually add on to what Pete shared, right? For David, okay, TQQQ, if I'm not wrong, is a leveraged ETF. That means
Triple leverage, yeah.
They do use leverage, okay? So be very, very careful. Okay, remember what I shared from Warren Buffett's report just now,
Okay, so guys, the first one here, this is your QQQ. Now, understand, QQQ tracks the NASDAQ. It's not the S&P 500, okay? Quite different. For example, you will not see Tesla in your S&P 500. Neither will you see in your S&P 500 growth because it's already not in S&P 500, for example. Yeah. Okay? So you can do a comparison and then just see what's the holding difference lah. Okay, so you can see Apple, Microsoft, Apple, then Amazon. In this case, Amazon takes a higher weightage in Nasdaq as compared to SPY, number one. Okay, you can also see like Visa suddenly appear in S&P, but you don't see Visa, for example, in QQQ. All right, so in terms of going for companies, I would say QQQ is not so much of growth company per se. QQQ is sticking to its original purpose, which is NASDAQ, which is the tech index, the tech company index. So that's why you see over here is mainly the tech companies. Whereas if you look at over here, then this is your S&P 500, those that are on the growth segment. Okay? So for example, you don't see Cisco here, all right? But Cisco appears here, all right? And also Pepsi, no, actually I don't know why Pepsi considered tech stock, man. Okay, but okay, but I see over here. Actually curious, I never noticed this. Okay, but otherwise you can see there's Comcast, there's Intel, and so on and so forth. Whereas your SPY growth, you can see here below is Home Depot, P&G, Salesforce. Right. So it doesn't mean when you talk about SPY growth, it's definitely tech company. It is not synonymous in this case. Okay. All right. Yeah, that's triple leverage. Okay. So, yeah. Okay. All right. Good. Okay. So, guys, you all learned a lot in this session. Yes. Okay.
Yep. I learned something.
Yeah. Everyone learned something. Okay. So after this, we're gonna post the next poll again. Once again, we'll get you guys to vote which sector you all want for the month of November. Okay. Which sector that you're most interested in. Hey guys, but before we do the poll, right, maybe for now, right now, think of a sector that you really want to go deeper, or you say that, hey, I'm actually quite familiar already, but I really want to dive deeper to share with everybody. What would that sector be? Okay, throw it in the comment segment right now. Let's go. Okay, which segment of the market, right? We have gone through financials, we have gone through healthcare. In fact, in some of our thing, hey guys, don't do the word tech. Tech is too broad already. Tech is too broad already.
Yeah, tech and software, there's hardware.
Yeah.
A lot.
Tech is too broad already. Oh, Pile only want to look at elections.
Yo. Pile, you're supposed to be robotic,
Yeah, robot elected. Okay.
Robot investor.
There's cloud, there's SaaS. Well, there's real estate, communication, SaaS. Oh, everything SaaS. Okay, hey guys. The thing about SaaS is that SaaS is a bit like tech. Okay, SaaS is a bit like tech. Anybody on subscription is called SaaS, So I don't know, like maybe I should go and create something and then I sell you all on a monthly basis. Hey, I'm also a SaaS company.
Costco is also SaaS.
Yeah, so in terms of saying SaaS and tech, it's not defining enough, right? It's like saying, hey, what do you like for Joe? What do you like for your wife? I want it to be a girl. Like, huh? Like, I want it to be female, huh? No, you cannot say that, right? You need to be more specific, right? I can see Chungai laughing. Very good. All right. So let's say there's food, cloud business, communications, comms. Okay, so very good. So guys, why I want to do this is this. I want to set the expectations better, higher for you guys. So when we do out the poll, right, please do not say tech. Please do not say SaaS. Please do not say, I don't know, what else can you say? Like too generic one, basically. All right. try to go as specific as you possibly can, and then we want to dive deeper. Okay, especially if it's a company that you're interested in, right? Then we can go deeper as well. All right. Wow. So Gary, very good into alternative, clean energy. Okay. All right. So great. Okay. So watch out for the post. We'll post it on the Facebook group. Okay. And then we'll do the poll over there. Then once again, guys, remember, do your homework. The next round will get you guys back to share again, and we'll pick the top one. All right. And then we'll see who will be the winners for the next month's stock pick challenge. Okay. So for November, we'll see who's the winner. But once again, I want to congratulate the 3 winners for last month. Great job. Fantastic. Okay. And we'll contact you all shortly about the rewards as well. Okay. So if not, Joe, you have any last thing for them?
No.
Okay. All good. All right. So guys, have you all watched my... Oh, someone just came in only. Oh, jialat lah. Okay. I don't know who is this, but just came in only. Okay. But guys, if y'all haven't watched the market update that I posted today, please go and watch it on Facebook first, right? Have a better understanding about the market. Most importantly is this: if the market is going to throw us good deals, be ready to catch it. Okay? All right. So that's all we have. Thank you, everyone. Okay. And we'll upload this recording on the Facebook as well. Okay?
Yeah.
Thanks, everybody. Thanks, Chin Chin. Thank you.
Thank you.
Thanks, Winston.
Thank you.
Thanks, Chin Chin and Sarah. Thanks, Chin Chin and Jerica for submitting. All right. To
Yeah.
BlackRock. Very interesting company. I'll dig deeper as well.
Thank
Okay.
you.
All right. Thanks, guys. Bye-bye.
Bye-bye.